Tough times ahead for the music streaming giant Spotify. The company recently announced a massive cut of 1,500 jobs. This downsizing accounts for a whopping 17% of the company's workforce. It's a significant move, but what's behind it? Well, it's all about aligning costs with objectives. Spotify's CEO Daniel Ek has stated that the company's economic growth has slowed dramatically. That's a big deal for a company that's been on the up and up. This slowdown means Spotify has to tighten its belt and focus on its main goals. In the past, Spotify has seen some impressive numbers. The company reported a profit of 65 million euros for the 3 months ending in September. That was its first quarterly profit in over a year, and it was driven by price increases and a rise in subscriber numbers. But it seems that wasn't enough to keep things sailing smoothly. Spotify has ambitious plans for the future. The company aims to reach 1 billion users by 2030. Right now it's sitting at 601 million users, so there's still a long way to go. To reach this goal, Spotify has been investing heavily in business expansion and securing exclusive content like podcasts. But not all of these ventures have been successful, and that's part of what's led to this recent downsizing. While this move is painful for the team, Spotify assures affected employees will receive severance pay, holiday pay, and healthcare coverage for the severance period. It's a tough time for the tech industry, with job cuts becoming a trend due to the ongoing impact of the COVID-19 pandemic, but Spotify seems determined to weather the storm and continue its fight to dominate the world of music streaming. In another hit to Spotify, Meghan Markle's podcast, Archetypes, will not be back for a second season. The streaming company and Markle's production company, Archewell Productions, decided it was best to part ways. But what does this mean for both parties involved? Well, it's a bit of a financial hiccup. Markle and Prince Harry will not receive the full $20 million payout from their deal with Spotify. Why, you ask? Simply put, Archewell did not produce enough content to be eligible. It's a classic case of quantity not meeting up with the contractual obligations. The exact details of the settlement agreement and the number of projects they were expected to deliver are still unclear. Despite the abrupt end, it wasn't all doom and gloom for Archetypes. The podcast debuted in August 2022 and saw its fair share of success. It reached the top of Spotify's charts in multiple countries, proving that there was indeed an audience for the content put forth by the couple. This development, however, comes amidst a downturn in the tech and media sectors, with Spotify having already laid off 800 people this year. As for the royal couple, they bid adieu to their royal roles back in 2020 and have since been dabbling in various ventures. One of their notable deals includes a $100 million agreement with Netflix. Their docuseries, Harry and Meghan, found popularity among viewers, and Prince Harry's memoir, Spare, broke sales records. Despite the setback with Spotify, the royal couple continues to find success in their other ventures, including a $100 million deal with Netflix. The ripple effects of Spotify's recent decisions are being felt across the stock markets and the wider tech industry. One of the immediate responses was seen in the initial surge of Spotify's shares by a notable 5%. This, however, was a fleeting victory as the shares retreated subsequently. This pattern of layoffs isn't isolated to Spotify. In fact, it echoes the recent actions of other tech giants such as Amazon, Alphabet, Salesforce, and Microsoft. Each of these companies, in their quest to align costs with objectives, has opted for workforce reductions. It's a domino effect that's causing waves in the tech industry and, by extension, the stock markets. Speaking of stock markets, let's consider the S&P 500, a reliable barometer of the U.S. market. With about a quarter of the S&P 500 companies expected to report their fourth quarter results, investors were on their toes. Amidst this anticipation, the news of Spotify's layoffs hit the market. While the initial reaction was a surge in Spotify's shares, the subsequent retreat of shares painted a more realistic picture. It's important to note that this isn't just about Spotify or the other tech companies. This is about the larger landscape of the tech industry and the stock markets. As more companies continue to adjust their strategies in response to various challenges, the ripple effects are felt far and wide. However, it's not all doom and gloom. There are also instances of resurgence, like Salesforce's shares increasing by 4% in early Monday trading after activist investor Elliott Management acquired a multi-billion-dollar stake. But as the tech industry navigates this intricate dance of gains and losses, one thing is certain: the stock markets are in for a ride. As investors keep a close eye on the unfolding events, the tech industry braces for a potentially tumultuous period ahead. In these uncertain times, it's more crucial than ever to stay informed. We've seen how Spotify's recent downsizing and the fallout of their deal with Meghan Markle have rippled across the stock markets and the larger tech industry. These events are more than just headlines, they're indicators of broader economic trends that can impact us all. It's essential to understand these shifts, to foresee and navigate the ever-evolving business landscape. For more updates on this and other breaking news in the tech world, make sure to subscribe to our channel and hit that notification bell. Stay sharp, stay informed,